This is the Empowering Healthy Business Podcast, and I'm your host, Cal Wilder. Each episode, we'll dive into topics important to folks who want to run businesses that are both nicely profitable, sustainable, and scalable, and who want to achieve balance in their lives and realize their potential inside and outside of work. This show is sponsored by SmartBooks, provider of bookkeeping and accounting for businesses. Let's get started. Greg Reed, welcome back to the show.
Thanks for having me.
So as we are about to enter tax season, I'm excited to be speaking with you and help our audience understand what they can do to make this as successful as possible for them in tax season.
Feels like we just wrapped up tax season, and here we are again.
Well,
I think
we must be getting old, Greg, if the year goes so fast.
I know, right? The older you get, the faster this. I don't want to talk about it. But so we've got a lot going on. It's gonna be a big year. We've got the One Big Beautiful Bill Act. I know we've touched on that in the past. I know a lot of taxpayers are feeling a little anxious about this upcoming tax season. I've talked to existing clients. I've talked to a couple new clients, and they're just feeling like, I don't know what my tax bill is going to be. And that causes a lot of anxiety and makes for a pretty rough tax season. So, a couple of things that I want to touch on today. We have a new service offering that I'm pitching to clients. And then I just want to talk about best ways to, prep for tax season to have a successful season with your CPA.
Great. Yeah, I know. I was kind of surprised with the One Big Beautiful Bill. I didn't realize it brought back the research and development tax credit. And there are probably some other things that got brought back or introduced that we're not aware of. So I think it's probably, a really good time for listeners to engage with their CPA to figure out, what applies to them for 2025.
100%. And, unfortunately, we're past December 31st, so a lot of the tax deductions for 2025 may have lapsed. There's always things that we can do, but for the most part, everything's at this point set in stone, and there's not much that we can do from a tax planning standpoint. Which brings me to our latest and greatest service offering. This is a premium service offering that I'm really excited about. I've kind of tested it on a couple of clients so far last year, and it worked out really great. These clients are going into this tax season feeling ready, not anxious about anything. They are, just waiting to get my organizer, and then we're good to go. We'll get them filed on time because I have a good understanding of the client, and should be pretty painless for both sides. So it's a monthly tax coaching offering, and what that means is that we're gonna meet with you on a monthly basis. We're gonna have check-in calls. We're gonna take the tax strategies that that I've presented to you and put them into place and make sure that we're staying on top of them. Obviously questions come up throughout the year. This is a good time for us to, talk about those questions when they're top of mind to you. Maybe they're a little bit more relevant to you. As new tax strategies come up, we're able to take advantage of them much sooner. So this is a new exciting offering that we have, just monthly tax coaching. It's going to be different from projections or, say like quarterly tax planning, where, projections, we're just going to tell you what you're going to owe at the end of the year. And quarterly tax planning is, optimizing your, really optimizing the estimated tax payments.
Cool. And so let me just rephrase this, make sure I understand. So you know, at a minimum, people need their tax returns filed. If you take the next step up from there, you'd like to know in advance what your tax bill is going to be. So that's your tax projection exercise, which you do for
Yep.
clients, right? And that requires at least meeting with the client once a year to, get the
Once or
information
twice,
and
yeah,
consult.
we'll,
Yeah. And then you can do
update
some
it.
tax planning, which might be highlighting certain tax savings opportunities. But then you rely on the client to implement those. And then you take the next step and the final step into tax coaching, where you're talking to clients once a month, once every 2 months maybe, and you're coaching them to actually implement the tax planning strategies that you've decided are a great fit for that client to help them actually get the job done, right?
Absolutely, and this allows us to be super proactive. I know that's a point that a lot of new clients that we get bring to us, and they just say, my CPA wasn't proactive. I had to reach out, more than one occasion. I, brought planning opportunities to them. And this is meant to mitigate that. So we're acting more as like a business partner rather than just, your tax filing CPA.
And so you've gotten certification over the last year, right? Tell the listeners about what you've actually studied, because this is not like your run of the mill tax CPA type stuff, right? This is the next level up.
Correct. Yeah. So last year I went out to San Diego. Thank God it was last year because this year it's a little wet. Um, but the uh, the tax coaching certification is just a resource that we now have available to us that gives us a library of tax saving strategies. These are all vetted strategies. They've held up in court for the most part. For some of the newer, like one big beautiful bill strategies, they've they've gone through like several CPAs who have vetted the strategies, kind of put it into plain English, and gives us an opportunity to present this to the clients.
And so it's funny, we were speaking with a prospective client a few weeks back, and he basically said to us, he's not opposed to paying taxes, but he does not want to pay list price, right? He wants the discount that everybody else gets, right? So a lot of what you're doing is figuring out how clients can get that discount on their tax bill, right?
Yes.
Everything's legal, but they're getting the maximum discount.
Yeah. Just like buying a car, no one wants to pay the sticker price, and same for your taxes, right? If we could save a client, actually, I was looking at a prospective client a couple weeks ago, figured out I could save them, about $50,000 in taxes the first year, and then, 10 to 20,000 going forward thereafter. That's a lot of money, and they can, take that and reinvest it in the business, reinvest it in their community. These are all legal strategies. You just want to be able to make sure that you're taking advantage of them so that, you can use that money for, something that's maybe a little bit more important to you than the government.
Right, right. And so as we get into January here, what should clients be thinking about? What should listeners be thinking about how to make this as seamless and successful a tax season as possible for them?
Yeah, so now we're in January. We're getting ready for tax season. The IRS will probably open for. They may have already posted it, but they will open their e-filing site probably the last week of January. Most states are quick to follow that. The form should be finalized by the last week of January. The tax software companies have had plenty of time to get everything squared away. So it should be a pretty smooth entry into tax season. Um, so right now is a good time to start pulling together your documents. You know, especially your itemized deductions. This year, we even if you've filed for the standard deduction in the past, because of the increased state tax deduction from 10,000 to 40,000, maybe itemized deductions is back on the table for you. So things like medical expenses, if they're on the bigger side,
So if you live in a high tax state with high property
high tax
taxes,
state,
you,
yep,
you you're able to deduct.
mortgage
Yeah,
interest.
okay.
Um,
So that's huge for people who live in these high tax states with good
yeah,
incomes. Yeah.
exactly. And I think a lot of people, I mean, I've even advised some people to, don't worry about it. Put that off your list. Don't, the people who write down every single prescription that they've paid for, every doctor's visit, stuff like that. I'm like, you know what? You're wasting your time because we can't use it. But now that could change. So, might be a good time to start going back through your records and figuring that out. And then, as far as business owners go, working with your accountants. So, I mean, SmartBooks does a great job of this anyways, but, making sure that, the year end gets closed, final year end entries are getting recorded correctly, stuff like that. The sooner that we can get a clean set of books, the sooner we can start prepping your taxes. So, it's important. Obviously, it's also 1099 season, so that's another important thing to start pulling together your records for.
One thing, Greg, I'll mention, listeners, this may be applicable to them, or it may be applicable to their parents if they've got some retired parents with IRA income. One thing I had to learn kind of the hard way a couple years back was the required minimum distributions from IRAs. And if you're going to make charitable donations, there's a big benefit to having the investment company, Vanguard, Fidelity, whoever, send the checks out to the charities rather than you take the distribution first and then you make the donations personally after that. Because if you have the fund company send the checks out, then they can net that out of the reported income to you. And it's, less taxable income to you. Whereas if you get the full gross amount from the investment company yourself and then you make the contributions personally, you may or may not be able to deduct the charitable donations depending on your personal tax situation. So just one quick pointer is if you can have the investment company send those checks out to reduce the amount of the reported distribution to you, that's a lot of money at stake potentially.
Yeah, no, absolutely. Yeah, I had a couple of clients run into that where they, got the money and then made the charitable donation, and maybe they didn't itemize, and now they don't get the advantage of that benefit. So it's a good point. Talk to your investment advisors about that, and see what you can do. Obviously, you got to do it. Anything you do now is for 2026, but it's still a good point. I would also recommend for clients to start pulling together estimated tax payments that you might have made, and organizing that. A lot of clients do forget that sometimes, especially the earlier ones. And, now we end up getting letters from the IRS saying, you overpaid, or here's a big refund. And it's usually a good situation because you're getting money back, but, you don't want to be loaning money to the IRS.
Yeah, and this is also this time of the year if you have not done kind of a monthly home office reimbursement. This is a good time of the year to add up all of your home office expenses and utilities and everything, and prorate that. If you've used 10 or 20% of your home for business, well, add up all your expenses associated with that real estate and submit an expense report to the business and get reimbursed now, right?
Yep. Start looking at travel. Especially if you're a single member LLC, like a small business single member LLC, like that's all stuff that we would be taking on Schedule C. And then kind of more, I guess we'll call it, what's the word I'm looking for? Housekeeping items. Making sure that you have access to the client portal if your CPA, excuse me, client portal if your CPA uses one. Maybe reach out to your CPA, make sure that they're still around doing your taxes. I have had clients come to me and say that, their CPA closed up shop and never told anyone. And then, we typically will send our tax organizers out, second or third week of January. You should, every CPA is a little different on how they want to collect information, but make sure that, you should be looking for some form of communication from them in the next couple of weeks. If you have questions, ask your CPA. If you typically have to book a meeting with them, make sure that you get on their calendar. And then otherwise, hopefully you have a good CPA that's staying proactive and communicative during this time. But it is a busy time for us. So
yeah, so cut them a little slack, I guess you're saying.
Yeah.
Cut them a little slack if they're a little slow to respond. But still, this is one of those years where there's a lot, changing. Some years you kind of go through the motions, but 2025 with the big beautiful bill, there's some major changes that impact small businesses and business owners, right? So this is one of those years where you really do want to be in communication with your CPA.
And I'll say my last kind of tidbit point is, if you are coming into this tax season, maybe feeling a little anxious about what your tax bill might be, that's usually a sure sign that you should be meeting with your CPA throughout the year to do some tax planning, or at least some tax projections, at the very least. And if there are planning opportunities, hopefully they can identify those for you.
Yeah, that's definitely one of the things, right, Greg? We pride ourselves on is trying to help clients avoid those unpleasant surprise tax bills at the end of the year and help clients get their tax returns filed on time. So avoid the negative surprises at the end of the year and hopefully get the returns filed on time, right?
I don't like giving those phone calls, and people don't like getting them from me. So, yes, the idea is no surprises.
All right, Greg. Well, rest up. Get your rest if we go into tax season here. All right. We'll talk to you later.
Thanks for having me.
Bye.
Bye.
Another episode in the books. Thank you so much for tuning in. For show notes and more, visit empoweringhealthybusiness.com. If you would like to have a one-on-one discussion with me or possibly engage SmartBooks to help with your business, you can reach me at C-A-L, at empoweringhealthybusiness.com, or message me on LinkedIn, where I am easy to find. Until next time, this is Empowering Healthy Business, the podcast for business owners, signing off.